to have you join us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first take a look at what you can expect from us in the latter half of our program. All eyes are on Greece as it enters a new phase in its prolonged debt crisis. We take an in-depth look at how this all might impact Korea and the rest of the world. A signing ceremony for the Asian Infrastructure Investment Bank is held with the China-led institute set to rival the World Bank and Asian Development Bank. Now, companies here in Korea are not holding high business confidence amid the effects of the MERS outbreak, and their outlook remains cloudy ahead. The Manufacturers Business Survey Index continued its plunge in June, dropping 7 points on month to 66, the lowest on record since 2009 after the global financial crisis. A reading below 100 indicates more firms have a negative outlook. And with global unease stemming from Greece's brush with default, the projection for July dropped 9 points from the forecast a month before. Manufacturers pointed to weak domestic demand as the top reason for their pessimism, followed by uncertainty in the economy and steeper competition. And the gloomy tone bleeds into the service sector as well. According to a survey of nearly 150 tourism-related companies by the Korea Culture and Tourism Institute, their business survey index in the second quarter was a mere 14, just about a quarter of what it was following the Seoul-ho ferry sinking last year. The record low was also 36 points lower than the reading in 2009 amid the global financial crisis. For companies that mainly target domestic travel for Koreans, their sentiment was zero, meaning all firms surveyed believe that current business conditions are unfavorable. China hosted the signing of a formal charter for the Asian Infrastructure Investment Bank in Beijing. Now, the bank is seen as a rival to other multinational financial organizations like the World Bank and the Asian Development Bank, and is set to begin operations next year. Our Shin Se-min on this story for us this morning.
Representatives from 57 founding nations gathered in Beijing to sign articles of agreement for China's biggest foreign policy achievement yet, the Asian Infrastructure Investment Bank. Korea, as a founding member, has vowed active cooperation with the bank.
Korea's participation in the AIIB will help create business opportunities in the construction, communication, and IT infrastructure sectors.
The bank will start with an authorized capital of $100 billion. China holds the largest share with 30%, followed by India and Russia. For its part, Korea is chipping in a total of over $3.7 billion of capital through 2019. As the fifth largest shareholder, Korea has a near 4% stake in the bank, the most it has ever held in any global financial organization.
The large share will help Korean companies expand their businesses into third countries, using some of the world's top infrastructure skills.
Experts say, however, that more negotiations are needed as Korea is aiming to secure a standing manager post or win one of the vice governor slots to improve opportunities for Korean companies. But questions over the infrastructure of the bank remain. Despite the hope that Korea, along with other member nations, will have a say in decision-making process, worries persist over the transparency of the AIIB as China could try to exploit its power in raising its economic and geopolitical influence within the region. Shin Se-min, Business Daily.
Greece is set to be cut off from international rescue funds as of Tuesday, as officials in Athens have said they will not be able to meet the deadline for a loan payment to the International Monetary Fund. Many Greeks are making a dash for cash as the country heads into uncharted waters.
With the clock now ticking, it's only a matter of time until Greece defaults on its $1.7 billion loan payment to the International Monetary Fund. On Monday, the Greek government closed the country's banks as well as the Athens Stock Exchange and also impose capital controls after the eurozone effectively put an end to Greece's 5-year bailout. Greeks have been rushing to ATMs to withdraw money to prepare for a cash dryout. All this comes as Greece asks for further debt relief from the eurozone leaders, but government said they would only discuss such options if Greece further tightens its budget. Prime Minister Alexis Tsipras has blamed international creditors for the crisis that now threatens its membership in the 19-nation euro currency bloc. The fate of the country will now hinge upon a referendum scheduled for July 5th, in which Greeks will vote on bailout measures. European leaders have warned a no vote will in effect be choosing to leave the eurozone.
And to tell us more about this, we're now joined by Professor Junsuk from the Catholic University of Korea. Welcome to the program, Professor.
Happy to be here.
All right, so can you first tell us a little bit about where Greece now stands in terms of its debt? I mean, how much does Greece exactly owe to its international creditors like the IMF, the ECB, and the Eurozone governments?
Okay, in total they owe about 330 billion euros, so that's about 180% of their GDP.
Wow.
But I think what's much more important here is how much do they have to repay in the next few months, because that's what they have to pay right now. That's what they have to have in their vault. And as the report mentioned, they have $1.7 billion, euros going to IMF in the next month. And then they have 2 billion euros of bonds which are coming due. And then they have 3.5 billion euros which they owe to ECB, which they have to repay in July, and another 3.2 billion that they have to repay to ECB again in August. So that's a lot of cash that they do not have.
Yes, all right. A flurry of repayments they have to meet now. But Greece is scheduled to hold a nationwide referendum on creditors' proposals on July 5th. I mean, what kind of outcomes can we expect depending on the vote?
Okay, well, there's a slight problem here because this is sort of their old plan. Because the situation has gotten so bad since the Europeans have announced that particular plan, we're not quite sure if that plan will be offered again. But as far as the referendum goes, there's 4 possible scenarios. One, the referendum passes, but the Greek government maintains a hard line. That means we go back to the situation we had a couple of weeks ago. Or the referendum passes, but the government capitulates. So they take the European conditions. That means we go back to a situation we had about beginning of the year or late last year. There'll still be austerity, Greek people will still suffer. Now, if the referendum does not pass and Germany insists on those particular conditions, then Greece may go out of the euro. And then finally, if the referendum fails, Germany may blink. And they said, we really don't want you to leave the euro, so we'll give you easier conditions. And I think this is what the Greek government is hoping for, but I'm not sure if they'll get it.
All right. Well, a Greek default will obviously impact the global financial market. I mean, but then we've already seen effects from it. And what kind of results can we really expect from a Greek default if it happens?
Okay, well, if you take the European financial authorities at their word, there's a firewall that's being built around Greece. So it should not have that much effect outside Greece. So there will not be a global financial crisis, but obviously there will be a lot of problems within the Greece itself and maybe peripherally with the European banks. Hedge funds are not very exposed to Greek debt because, well, it's become radioactive, but there's still some limited number of hedge funds which have invested heavily in Greece, and they will be affected.
All right. Well, the Korean government also held an emergency meeting on Monday to discuss the situation in Greece. How do you think a Greek default will impact the Korean economy then?
Okay, well, as far as the trade is concerned, we don't really have a lot of direct trade with Greece. The shipbuilding, as the report just said, but it's really not that much. So directly, trade will not be affected very much. But if this slows down the European economy as a whole even more, then that will obviously have impact on us. What concerns me the most, though, is capital flows, how the changes in capital flows will come. And it depends on how much of a flight to safety panic that we see. And we don't really know how much that will be. The two scenarios that we can see here is first, Korea will be thought of as sort of a risky country. And then we'll have some capital outflow, which may be big if the panic is big. That's the very dangerous scenario that the government will be watching out for. But another scenario is if the international investors believe that Korea is a safe country, like Japan, then we may actually have capital inflows, which will create problems of its own. So the government really needs to watch whether the capital flows come in or go out to excessive extent.
All right. Well, what about the possibility of seeing the so-called Grexit, I guess the Greek exit? What are the risks associated with it, and how would the Korean economy be impacted from it?
Okay, well, Grexit basically says that they're going out of the euro. So what they'll probably do is initially put out some IOUs to people who they owe money to domestically and internationally. And then they'll use the old currency, drachma, to settle the IOUs.
Okay.
Most international observers believe that the odds are well below 50%, but what's interesting is a lot of very famous economists are saying that the odds will be better than 50% that there will be a Grexit. So that's a worrying aspect that's different from a couple of years ago.
All right. And how would the Korean economy be impacted by it then if it happens?
Okay, well, similar to what I said before, but to a greater extent.
Okay.
So there will definitely be a temporary panic in the market, and there will be flight to safety where people try to exchange risky bonds for safe bonds in the United States and Japan and so on. What's going to make a real difference is whether Korea will be thought of as a safe harbor or a risky harbor. And then if it's a risky harbor, then capital flow will go out, which will have problems of its own. If it's thought of as a safe harbor, then capital flow will come in, but that also means that Korean won will appreciate, and we'll have this, we may have the same problem that Japan had for the last 5 years.
All right. Thank you so much for coming in today, Professor.
Thank you.
All right, that'll do it for me for this edition of Business Daily. Hope you enjoyed it. We'll be back tomorrow at the same time, same place. Until then, goodbye.